Right, so we want to look at inventory. Right, so we need to define inventory here. Right, let's start by looking at inventory. Right, so obviously inventory from your previous work, you know that inventory refers to assets. So therefore we say these are assets. Right, these are assets. Number one, right, held for sale. Right, in the ordinary course of business. Right, held for sale in the ordinary course of business. Right, so we call these finished goods. Right, so if you buy goods for the purpose of sale, this is what we call finished goods, and it is part and parcel of what? Of inventory. Right. However, inventory is not only isolated for goods held for sale. We also have goods held in a process. Right, in a process of production. Right, for sale. Right, other entities don't buy for sale. Other entities manufacture products that they then what? Sell. So if you are in the process of manufacturing a particular product that you want to sell, which means the product is still on the production floor, is still being manufactured in your factory, right? We call that work in progress. Right. So with work in progress actually meaning incomplete goods that are still in a process of manufacture. So we call that work in progress, and it is also inventory. Right. Finally, we also have consumables. Right. We have consumables, or material, right, to be consumed, right, in a process of manufacturing. Right. We call these raw materials. Right. And consumables. Now, raw materials is the material that you need for your factory, right, which you buy and you put maybe in a storeroom or a warehouse. Then as of and when production needs it, you then transfer it to the factory and it becomes work in progress. So those are what we call raw material. This is the material that is used to produce the product that you are manufacturing. Right? Consumables are those things that don't make part and parcel of the product that you manufacture, but are consumed in production. Right? For example, if you are in production, you need oil for the machines, you need grease for the machines, you need cleaning chemicals to clean the machines and what have you. Those are consumables that you are going to use in your production processes. So whenever we talk about inventory, these are the items that we are talking about. And remember, these are usually non-current assets. So these are non-current assets, meaning to say that they are expected to be
Hello,
utilized.
Sir. Hello. How are you, mate? Fine.
Right,
Fine too. Did you have a good morning? Yes. Mm-hmm.
right. Let's
Same, yeah.
see people. Right, I think we're sorted there. All right, so this is what we call inventory. So in other words, we are saying this is comprised of, right, raw materials, right, finished goods or work in progress. Let me do it progressively. right? Finished goods. And in those circumstances,
Yeah. Eu siyabonga usiphathele iparish.
right, please mute, good people, please mute. Okay. Then we have consumables. Right, most of your questions actually give you just these three. So whenever we talk about inventory, these are the items that we are talking about. Any questions, good people, from the floor? Are we understanding this? Right, let's talk about the measurement of inventory. Right, let's talk about measurement of inventory. Right, when we talk about measurement, good people, we are saying what is the amount of value monetarily that we are going to ascribe to a particular item. So we are saying when we record the inventory in the books, at what value are we going to record the inventory at? Right, there is a particular principle that we have to follow at all times when dealing with inventory. The principle says inventory shall always be measured. Right, inventory shall be measured, right, at the lower of costs, right, or net realizable value. Right, inventory must be measured at the lower of cost or net realizable value. So there are two important figures when we want to determine the value of inventory. Right, we should be in a position to be able to determine the cost of the inventory. We should be in a position also to calculate what we call the net realizable value of inventory at the same time. So these are the two important things that we have to make sure that we are very clear about. Right, let's talk about the cost of inventory. Right, we want to talk about the cost of inventory. Right, when we talk about the cost of inventory, it comprises of three main items as follows. Right, it comprises of three different costs as follows. Right, so usually we have the purchase or the cost of purchase or purchase price. Right, remember some entities buy inventory for the point of sale. So if I'm a supermarket and I don't manufacture anything, the stock that I sell, I probably bought it for the purpose of what? Of sale. And that represents finished goods to me. However, some organizations are into manufacturing, but of course they will have to purchase the raw material perhaps that they use in their process of manufacture. So you need to know how to calculate the cost of any inventory that you would have purchased as an entity. Then if you are a manufacturer, we then have what we call conversion costs. Right, conversion costs are the costs incurred in the factory to convert the raw material that you purchased into finished goods. Right, and then we also have any other costs. Right, any other costs incurred to bring the assets, right, to present location and condition. So whenever we want to determine the cost of inventory, we have to make sure that all these three categories of costs we are able to calculate and determine. So starting with the costs of purchase. Right, so when we talk about the cost of purchase of inventory, right, be it the purchase of finished goods, be it the purchase of raw material, which is still going to be utilized in the factory, right? The calculation is made up of the following. Right, number one, we need the purchase price. How much did we pay to acquire the inventory? Right, we also include import duties. Right, if we imported the goods from outside the country and we incurred import duties, we add them to the purchase price. Right, we also add taxes, but we must be careful. These taxes must not be recoverable. Right, these taxes must not be recoverable. Right, a recoverable tax is one that you pay and then are able to claim it back from SARS. A good example of that would be value-added tax, VAT. So which means VAT must not be included in the cost of purchased inventory. Why? Because VAT, if you're a company and you're a vendor, you can claim it back and it will be paid back to you by SARS. Right, so these are the items that we include here. Then we always exclude, right, or we deduct, let me use the word deduct, or less discounts received and similar rebates. Right, so if you want to calculate the cost of purchased inventory, these are the things that you should take into account for the purpose of determining the cost of purchase. Right, for that, I have a question that I want us to have a look at. So this is the question that I want us to tackle, and let's see what the question says. Right, it says here, a Renepen Limited purchased 10 office desks for resale. The supplier agreed to supply the desks at 200 Rand per desk. The supplier grants a 10% early settlement discount provided that the invoice is settled within 30 days. It is highly probable that Renepen Limited will utilize the settlement discount. Now, Renepen Limited has contracted a furniture removal company to collect the furniture from the supplier in Durban and to deliver it to the showroom in Gauteng. Right, the removal company charged the entity a non-refundable 400 Rand in delivery costs. Right, a goods in transit insurance was taken out with the entity's insurance brokers covering any damage to the desk while in transit, limited to the value of the original invoice price paid. The premium in respect of this insurance is 100 Rand. En route to Gauteng, an attempt was made to hijack the delivery truck, and one of the desks was irreparably damaged. A claim was submitted to the insurance company that the entity is not registered for VAT and has a policy of claiming discounts available to it. The cost of inventory after delivery will be calculated as follows. Right, so let's go back to the notes a little bit. Right, remember here, there is the cost of purchasing the inventory. Right, but if I want to determine the cost of the inventory when it is on my premises, I have to consider any other costs. So let's look at the any other costs that we are talking about here. Right, so when we talk about any other costs with regard to inventory, these are any other direct costs. These are any other direct costs, right, incurred to bring the assets, right, incurred to bring the assets to intended or to location and current condition. Right, when we say this is a direct cost, we are simply saying this particular cost was incurred because of the purchase of the inventory or because of the inventory that we have. Without that particular cost, excuse me. Right, sorry about that. We are saying without that particular inventory, we were not going to incur this particular cost. So this cost is specifically linked with the inventory that we have brought in as an entity. Right, we have the following examples of costs that we can include. Right, transport costs, what we normally call carriage inwards. Right, when you buy inventory from outside and you transport it, you add that transport cost. Sometimes we have insurance. Right, this is insurance while transporting. We add it to the cost of the inventory. Right, so these are the usual costs that we add in determining the cost of inventory. Right, we exclude the following. Right, general overhead expense are not included. Right, at general admin, right, cost of storage, right, unless if, right, so you don't add storage unless if it is part of the production process. Right, for example, sometimes when you deal with certain manufacturing processes, you may have a situation whereby maybe you manufacture up to a certain point, but you have got to store the item that you're manufacturing maybe for a week or so, and then you proceed with manufacturing. So if you incur the cost of manufacturing there, you can include them in the cost of the product because we are saying this is part and parcel of the production process. But there are other costs that are sometimes incurred for the purpose of what? Of manufacturing, which are not an essential part of the production process. For example, let's say maybe you had a breakdown in your machinery and you had to temporarily store what you were producing, what you had already produced to date for some time while you're repairing the machine. So that storage expenditure, if you incur it, it is not part and parcel of the production process, but it was an emergency that you were dealing with. You don't include that in the value of your inventory. Right, so let's go back to the question. Right, so in the question, these guys are buying desks. Right, these guys bought some desks, and we are told that they bought a maximum of 10 desks. So Ruben Limited purchased 10 office desks for resale. The supplier agreed to supply the desks at 200 Rand per desk. So when we want to calculate here the value of inventory, because we want to calculate the cost of inventory, we want to determine the cost of the inventory. Right, to calculate that, the first thing that we're going to take into account, right, is the cost price. Right, so we want to purchase a maximum of 10 desks. And each desk is going for 200. So this is 10 by 200. And this is going to give you 2,000. Right, then normally we say less VAT. right? There was no VAT on this one. I'm just including it so that we remember it. So please remember, if you had been given, say, an amount of 230,000, including VAT, right, at 15% per annum, right? Say the VAT was at 15% per annum. That is before the current increase that is causing all the problems in the country. Right, let's say this had included VAT at 15%. If you want the VAT amount, you then multiply that figure by what is called the VAT fraction, which is 15 over 115. It will give you, all right, I'm looking for the VAT. It will give me the VAT amount, which will be 300,000 there. Right, just in case they give you a question where they say the amount included VAT, you will have to calculate the VAT amount, and this is the formula for such a calculation. Right. However, for this one, there was no mention of the VAT being charged to the company. So the company did not pay any VAT. So they also said the entity is not registered as a VAT vendor and there's a policy of claiming all discounts. So the entity was not charged VAT. So that is why we are having zero there. But if there had been VAT and the amount already included VAT, we were going to deduct the amount of VAT, and that would have been the calculation. Any questions, good people? Are you understanding this? Right, are we there?
Lisa, can I ask something?
Yes, you can.
Okay, so when you said, let's say the amount is 230,000, right? Are we
Yes.
saying that 230 is inclusive or exclusive of that?
All right, I'm just simulating here to say
Yes, yes,
if they had given you a figure with VAT,
yes,
right? So I'm just saying it would have been 230, say it's 230,000, right?
yes.
Inclusive of VAT, right? At 15%, ne?
Mm.
So we are saying, how do we work out the VAT amount here? So it's just a simulation. Don't link it with the question here. I'm just giving you
Yes, yes.
the right. To
Okay.
calculate the VAT, you simply say 230,000 times 15 over 115. Then it will give you 30,000 if this is the figure there. Ne? So that will
Okay.
be the VAT amount.
Okay. You had said 300,000 before, I think. That's where
I,
it was confusing.
I think I made a mistake there with the
Okay. All right. Okay. Then I'm fine. Thank you.
sharp sharp. Right, let's continue. So we have dealt with the issue of VAT. VAT must not be included. If it is already included, then you must deduct it. You know how to calculate it. Right, then when we read the question, we were told that this person was also given a discount. It says the supplier grants a 10% early settlement discount, provided that the invoice is settled within 30 days. It is highly probable that Renepen will utilize the settlement discount. So therefore, we then say less allowance for settlement discount. Right, less the allowance for settlement discount amount. Right, in which case we'll have to calculate the discount was offered at 10% of that value. So we go to the info, right, we have a 10% early settlement discount. Right, if these guys earn the discount, they're going to reduce the price by 200 Rand. Right, so which means we are going to be sitting on an amount after VAT, if it was there, and discount of 1.8 rands. Right, so we want to read and say what other costs were incurred to bring the inventory into our premises. Right, there was transport costs. Right, says Renepen Limited has contracted a furniture removal company to collect the furniture from the supplier in Durban and deliver it to the showroom in Gauteng. The removal company charged the entity a non-refundable 400 Rand for the delivery of the 10 desks. Right, so we add the delivery costs. Right, so we want to add the delivery costs. We always add this cost if it is there. Right, when we read further, it says, right, a goods in transit insurance was taken out with the entity's insurance brokers covering any damage to the desks while in transit, limited to the value of the original invoice purchase price paid. The premium in respect of the insurance is 100. So therefore we paid insurance premiums here. Right, which is an amount of 100 rand, which was paid additionally by the entity. Right, so that therefore we then get a total here. Let's see how much our total is going to be. Right, 1800 plus 400 plus 100, so that gives you 2.3. So all in all, if the inventory arrives at our premises, this will be the total what? Cost of purchase. Right, so this is how we're going to calculate the total cost of purchase of that inventory, but there is an incident that took place en route to our premises, and this is what they say. En route to, right, en route to Gauteng, an attempt was made to hijack the delivery truck, and one of the desks was irreparably damaged. A claim was submitted to the insurance company. The entity is not registered for VAT vendor. Right, then the cost of the inventory after delivery will be. So this is the cost of the purchase. But we must remember that one of the desks was then damaged beyond repair. So therefore, we no longer have 10 desks on our hands. We now have 9 desks. We need to calculate the value of the damaged desk here. So what we do, we then say 1.8 divided by 10, because the cost of purchase was 1.8 after removing the settlement discount. This is what we were charged by the supplier. So when one desk was damaged, out of the total amount charged by the supplier, we lost 180, which means the remaining desk, therefore, in our hands are going to be measured at 2.3 minus 180, which means we have to record a total value of 2120. So this is the value of our inventory on hand. Right, this will be the value of your inventory. If this was the end of the year, this will be the closing inventory value if this was the only inventory that you have. So this is how we calculate the cost of purchased inventory. Any questions, good people? Right, are we clear, good people?
Yes.
All clear.
All right, thank you. Right, let's continue. Let's continue to the next stage. Right, so what we're talking about here was the purchased inventory. But remember, some inventory is manufactured by the entity, which means the cost of manufactured inventory now will take into account the cost of the raw material that was purchased. But when the goods get to the factory, the raw material, you then add the labor cost. You have to have employees who then convert the raw material into finished goods. Then you add also the overhead costs, right? And then you are able to convert the raw material first into WIP while you are working onto it, and then finally into finished goods when you are done. So we want to continue and look at what is called the conversion costs. Right, so when you look at the conversion costs, this is basically the cost to convert the raw material. Right, this is the cost to convert raw materials, right, into finished goods. Right, remember these costs are incurred in the factory. Right, these costs are incurred in the factory. Right, let's also note that any raw material that you then transfer from the storeroom into the factory, it becomes what is known as work in progress. Right, so when we look at these particular costs that we call conversion costs, right, they are made up of a number of things that we have to remember. Right, so this is comprised of, right, number one, it will be comprised of direct costs. This is comprised of direct costs. Right, when we talk about direct costs, these vary in direct proportion, right, vary in total in direct proportion, right, to changes in output. Right, meaning to say these are variable costs. Right, I will explain these terms. Right, these are variable costs. These are easily traceable. Right, to the final products. Right, being produced. Right, these are easily traceable. Another way of describing it is to say these are specific costs. Right, let's look at what we mean by the fact that these are variable costs. Right, so variable costs. Right, remember these change in line with changes, change in direct proportion, with changes in quantity or output. Right, at least in total. Right, an example of this will be direct labor. Now, the direct labor costs, it is the cost of the employees who operate the machines. These are people who are directly involved in production. So let's say that to manufacture one product, right, you need one employee per product. And the employee is paid 10 Rand. So we have a cost like to manufacture one product, it takes one employee in a month, and the employee is paid, say, 5,000 Rand. I don't know what this person is manufacturing, but it's very important, I think, at 5,000 for one product. Right, so we are then saying if you have the following quantities of production, if you produce one unit, you will need one employee. Right, you need number of employees, you need one. Right, whom you are going to pay 5,000, which means your total cost will be 5,000. If you need 10 units, you must employ 10 employees whom you are going to pay 5,000 each, which means now we are looking at what? 50,000. If you want 100 units, you employ 100 employees, you pay them 5,000, which means you now need how much? 5,000 by 100, that would be 500,000. So we are saying that there is a direct relationship between the number of units produced and the total cost incurred. The more the quantity, the higher the costs, which is what we are seeing here. As quantity or output increase, so does the cost in direct proportion. So such expenses, we call them variable expenses. Are we clear, good people? Are we understanding that? So in production, you will incur some costs that by nature are variable. Right, so next we then describe these as easily traceable to the final product or specific costs. Right, so when you are in production, you incur specific costs or non-specific costs. So, for example, let's say I've got the labor costs, the direct labor, right? And then I've got rent. Now, let's say the direct labor here, I'm manufacturing two products, A and B. This one needs skilled laborers. This one needs unskilled employees. Right, so I'm saying if I'm incurring the direct labor cost, for the skilled employees that I pay a salary to, that particular expense, all of it is attributable to product number A. Unskilled wages, all of them, they are subscribed to what? To product B. So therefore, the cost is actually specific. It speaks to a particular what? Product. So the whole amount, therefore, belongs to that product. And it is easy, therefore, to then what? Trace the cost to the final product. If here I incurred a cost of 10,000 in salaries, but I then produced maybe product A, I produced 5 units, then I can say 10,000, which is the cost incurred divided by the number of units. Then I say per each unit of A that was manufactured, we incurred a cost of skilled laborers of 2,000 Rand. And this is an accurate cost. It is accurate because the whole cost was incurred to manufacture the same product, which is manufactured the same way. So therefore, if we divide the total cost by the number of units, we get a cost per unit that is accurate. We can do the same also for what? For P. But let's say that we paid rent of 5,000 during the period of manufacture. We still have product A and product B. Now, this one is not a specific cost. This is a shared cost, right? Both the products, they are manufactured in the same space. So when I pay 5,000, it covers both A and B. But it is not specific because I do not know accurately which portion of this amount was for A and which portion of that amount is for B. I will have to allocate this cost using estimation. Right, estimation is not accurate. So remember here we said this is an accurate cost. But when you use estimation, it is a subjective calculation. So therefore, you are just estimating the figure. It is no longer accurate. So when you have a cost that is accurate like this is a direct cost. When you have a cost like this is an indirect cost. It is not accurate. Right, so we can then devise a system of sharing the cost. Maybe we can say, let's use the floor space occupied by the machines for each product. Right, maybe we're on the same shelf floor, but these products don't use the same machine. So we then calculate the space, say A production processes occupy so much space and B occupy so much. Then we allocate that particular cost. So this is what we mean when we say a cost is not easily traceable. It means you have to rely on estimation to determine the exact cost per unit. Any question, good people? Right, then we go to the next cost. So remember, we are saying conversion costs. We have direct cost, which here we said is your direct labor cost. Right, then you also have number 2, manufacturing overheads. Right, you have manufacturing overhead costs. Right, an overhead cost is any cost that is not direct. Right, an overhead is any costs that is not direct. Right, so it means that we are only excluding from the word overhead, we exclude only 2 things. Direct material, if we have it, and direct labor. Right, so it will be direct material and direct labor. Any other cost incurred is an overhead cost. Right, so when we look at overheads, there are 2 types of overheads. Right, remember we are specific here, we want manufacturing overhead. A manufacturing overhead is a cost that is incurred in the factory. It's incurred in production. So number A, we have variable overhead costs. Right, number B, we then have the fixed overhead costs. So you need to be able to make the distinction between the 2. I have already explained the term variable. Right, it simply means it varies in direct proportion to output. Right, but it is not easily traceable. Right, an example of this will be what we call indirect labor and indirect material. Right, then we have the fixed part. So remember, I've already explained what the variable term means. That's why I'm just giving an example there. Right, so but this time we're giving variable overhead. There I was explaining what a direct cost, right, which is variable labor costs. The same description of why labor is variable, you also have it there. Then we have the fixed costs. Now these are overheads incurred in the factory, but we are saying the total amount does not respond to changes in output. Right, the total amount does not respond to changes in output. Right, despite changes in output, we are saying this particular cost is always going to remain constant. It won't change in line with changes in output like the variable labor cost. This one behaves different from that. It doesn't change. Right, I'll give you the example of a rent expense. Right, if you are renting a premises for your business and you pay 5,000 per month, right? And you are charged 5,000 per month because of the square meters that you occupy. If you produce 1 unit there, the landlord does not care. You pay him 5,000. If you produce 10 units, he doesn't care. He's charging you per square meter occupied. You still pay him 5. If you produce 100 units, you still pay him what? 5,000. So therefore, we are saying this is an example of a fixed manufacturing overhead. Right. Any questions, good people? Are you understanding it? Right. Are we there?
Yes, we're there.
Yes, we are.
All right.
Thank you.
Then the most important thing that then follows now when you deal with your conversion costs, you need to know how to allocate them. Right? Remember, we said the direct cost, you don't allocate them, they are specific. So when you incur them, you know they belong to this product. But usually manufacturing overheads, these are shared costs. You have to know how to allocate them to products. So this is what we do. We then explain. All right, before I go there, right, let's discuss something. Right, joint and byproducts. Right, so we are saying sometimes your production process, not all times, but sometimes the production process right leads to more than one unit being produced. To more than one or product type right to be yielded by the same process. Right, so we are saying that you do your production, you go into one process, but at some point in production, you then split whatever process, whatever manufacturing that you are doing into a number of products. So you then derive a number of products from the same process. So we separate between right joint and by products. Right, let's say I am running a butchery. Right, when I buy a cow, maybe it's a live cow, I buy a cow, which is live, right, then I need to process that cow. Right, processing may mean that we have to butcher the cow, right, we have to skin it, right, we have to remove, right, excess stuff, like the hooves and what have you. So this is a process of manufacture. When I've removed all the stuff that is useless, I then split up the carcass into a number of products. Maybe I will have the following. I will have maybe grade A meat, right? I will have grade B meat, and maybe I may have bones and skin. Or let me just say the height. Let me just say the height. Right, so we are saying therefore in this very same process, because this is the process of manufacture that we do. Right, we then reach this particular point here. It's called the split off point. At the split off point, we then separate our manufacturing into different products. We are then able to then separate our meat, and grade A is derived from there, grade B is derived from there, and we also have the height. Right, the grade A meat is the tender type of meat, the special meat that you derive from the cow. That gives you your choicey cuts of beef. So you probably get your sirloin steak there, your T-bone steak, your rib eye, all of those juicy stuff. Then the remainder of the meat may be the fat linings that you trim off, right? That you can then turn into sausage, turn into mincemeat. The grade A meat you make tenderized steak. Right, then you have the hide. Now these two here, by nature will be joint products. And this will be a byproduct. Now you can see that the high value products are the grade A meat and the grade B. The height can have a market, but it's not high value. Now, probably you did not plan to produce and retail the height, but the height is just a byproduct of your production of grade A and grade B meat. It's just something that is a residual from that process, which can also have a small market somewhere. So you decide to also what? Sell it. So that therefore, when you describe here, you need to know the difference between the joint and the byproduct. So we have mentioned that we separate between the joint and the byproduct, right? The joint products, these are high value in total. This here is planned production. Right, so when you were planning to say, I want to do this business, right, you decided that you will make money by making a choice steaks. You want to be a retailer of steaks to restaurants, which can fetch a high price. The remainder of the less quality meat, but which is still also having a good market, you turn into mince meat, you turn into sausage, right? You plant that. That is your business. Then we have the byproduct. Right? This is usually insignificant in value. It can still be sold, but it is insignificant in value compared with the other products derived. Right? And this is incidental production. It's not planned. It's a byproduct of the planned production. Then all of a sudden you have the height. Someone wants to buy it, you can't give them for free. You charge them a little something. So that's a byproduct. Right. So what happens with this process? Remember, you are going to incur cost here. We call these the joint costs. Right? Because whatever the amount, if it's 100,000, you need to share it between the products. You need to split it and allocate it to the products here. Because at the end of the day, you must know how much it costs you to produce grade A meat packaging, grade B meat packaging. So part of that cost means you have to allocate a cost from here to grade A, grade B. So now this is what happens, right? Joint costs are allocated only to joint products. Right, so which means we don't allocate any joint cost to the what? To the byproduct. Right, so for the byproduct, right, we calculate the net realizable value of byproducts and deduct from joint costs. Right, before allocating to the joint products. Right, so let's go to a question. All right, before I left something important. Right, to allocate, right, joint cost to products. Right, for this module, we use the relative selling prices of the joint products. right? So those are the notes for a situation where joint products are produced in a process of manufacture. Whenever you have joint products, you need to be able to deal with that. So let's go to a question. Right, I've got a question here. Right, it says that Delta Limited is a pharmaceutical company. The company uses two raw materials, X and Y, in equal proportions in a chemical process that produces two main products. Right, we have head easy and headache, a byproduct. Right, calculate, or sorry, and the byproduct calc. So there is a byproduct called calc, which is sold to fertilizer manufacturers. Right, cost to sell are immaterial. One production cycle produces. So in our production, this is what we produce. Head easy, 300 units. Headache, 1,000 liters. Calc, which is a byproduct, 2,000. So the other two are the joint products. Then they say the selling price of that is 25 per unit, headache 15 per liter, calc it is 1.5 per liter. Then the total cost of production joint cost is 60 per cycle, right? You may assume that the value of calc C inventory is immaterial, right? So we want to calculate. So the cost of production of the joint and main products is allocated on the basis of sales value. The net realizable value of the byproduct is deducted from the main product, which is what I was explaining. So what you do with this, you want to split this cost, which is the joint cost, but it has to be allocated to these two. But before you allocate this cost, you must calculate the net realizable value of the byproduct, and you use it to reduce that particular figure. So let's start by looking at the calculation. We say net realizable value of the byproduct. This is our byproduct calc. Right, so to calculate this, to calculate the net realizable value, right, you then say, what is the total sales value? Then you go now to the output. This is what is produced in each single batch of production. Calc 2,000 liters. So we produce 2,000 liters of calc, and this is sold at a price of 1.2. Right, so you can see that this price is insignificant. The other products go for 25, 15. This one goes for 1.5. So 2,000 liters by 1.5. Right, so if you say 2,000 by 1.5, then you're going to get 3,000 in total. Then you say less further costs. Right, further costs are any cost incurred to dispose an asset. These are any cost incurred besides the joint cost. Sometimes you may find that you need to package the byproduct, or you need to advertise it, which in case you incur advertising cost, or you need to transport it to the customer, in which case you incur the transport cost. For this question, nothing was mentioned here. So therefore, there was no other further cost. Maybe the customers just come and buy on premises. You don't have to deliver. So this here is your net realizable value amount. Then what you do next, you then say adjusted joint costs. The only use that you have of the byproducts is to reduce the joint cost before you allocate to the joint products. So you say 60,000, which were given as the joint cost, minus the 3,000 here. Right, the answer that you're going to get there, that's your adjusted joint costs. which means therefore the adjusted joint cost will sit at what? 7,000 rand. Right, only when you have the adjusted joint cost do you then allocate, right, the adjusted joint costs to products. Right, in which case you then say you have got your head is, right, you have got your head ec. So you use the relative selling price, which is the total sales of the quantity produced. So we go to each product, 3,000, 1,000. Those are the quantities. Then we multiply by the selling price, 25 and 15. We were given those, and then we can get our total. So 3,000 multiplied by 25, that gives you 7.5 or 75,000. 1,000 by 15, that gives you 15,000. So in terms of the relative sales values, we then get these totals and we add them and get our total. So we say 15,000 plus 15,000, we get 90,000. Then we say 75 over 90, 15 over 90. Then we use that now to allocate the 57,000, which is the remaining amount. So if we say 75 divided by 90 by 57,000, we are going to get 4,750. 15 divided by 90 times 57,000, we are going to get 9.5. So we have effectively been able to allocate the 57. So eventually we are saying, right, the fixed manufacturing overhead is allocated to a head easy, to head ec, and to calc. Right, these are the allocations that we did: 4,750, 9,500, and we are going to allocate 3,000 to the other product to give us the 60,000. You have to share that cost between the products. And this is the way that you do it if you have got joint and buy products. Any questions, good people? Are we following? Right, it's rare for you to get the joint and buy product, but we need to cover it just in case they bring it. Right, just in case you have this one. So you need to be very, very clear on how to deal with that. Right, any questions, good people? Are we understanding this? Ziabuya.
Yeah, it is.
They're very quiet. Right, let me end it here on this one so that I don't give you too many things to cover. That would be too much. You go and sit on this and cover it. But more importantly, before you go to the joint and buy products, what they normally ask in assignment number 1 is this: the calculation of the value of inventory. So you start here, you master this, you are likely to get at least a couple of marks on the assignment in connection with this. So this is a must. This one that I've just explained now, it's rare for them to ask you a question on joint and buy products. But you never know. You are not the examiner. I'm not the examiner. He may wake up tomorrow on the wrong side of bed and give you this. Ne? So you need to have an idea just in case they bring it. So with this, we are halfway through inventory. We need to conclude the inventory. So let's do that next week. And we know that we are done with inventory. If it comes in the assignment, we have an idea what to do. Right, then we'll go and do the other parts of the assignment. So check your assignment. They will give you an idea of which learning units you must cover. One of them is inventory. And then you also have, I think, the conceptual or the introduction to companies. So there's a lot that you need to cover there besides this. But I don't want to give you information overload because I know the joint and byproduct is quite a bit tricky. So let's hold it here. I will share the recording as per the norm, but only in the evening today when I'm done with my classes. So thank you for now. Unless if there is a question from the floor, we are done. Right. Thank
Sorry, sir.
Yes, ma'am.
Could you please resend the registration forms again in the group? I'd restarted my WhatsApp and I lost all the data, please.
All right.
And maybe if you could also send the previous classes as well, please.
All right. Remind me after 6:30 when my classes are done. I'll send. Ne? Just remind me in the group there.
All right. Thank you, sir.
Sharp, sharp. Thank you. Thank you, good people. Sharp, sharp. Ne?
Yes, sir.
Thanks, Hamilton.
Sharp, sharp.
Yeah.
Thank you.
Sorry, sir.
Yes, sir.
Yes. I saw that the assignment is actually due on the 28th, which would be Friday. So I was asking when